I spent some time going over the Bitcoin chart today, just trying to see if I could figure out what was going on, and I just found some stuff that I like what I'm seeing. It's got some scary parts in it, but then I think it has a hopeful outcome, and I hope this isn't me being blind or anything to the possibility of downside. I do see in my charting some potential for some what we might call short-term downside, but that short-term could last several days, even a few weeks, before maybe turning back up. So let me show you what I've got. Obviously, you can see my waves here: 1, 2, 3, 4, 5. I struggled a little bit with the area in the kind of this area here, because you could have called this maybe 3, 4, 5, and then this was a corrective structure in the larger thing, and then you still end up with a 1, 2, 3, 4, 5. So you kind of end up with a end of a fifth wave here, no matter what. So I just went with the simpler form. And this is a problem, an area I was really struggling with because of its varying heights and depths of waves that don't, they're not higher highs, not higher lows, or they're kind of all over the place. But I've got some measurements that I think help reveal what I think I'm seeing. I know this. I feel like this is corrective in nature just because of its more horizontal direction. One of the things I've talked about before is the circle, the clock, mentality, if you want to call it that. That if you look at a clock, put some crosshairs on it, so you kind of have a noon, 3, 6, and 9, and if it's hugging closer to the horizontal line, then it's more likely corrective. If it's more angular, like this one, then it's more impulsive. So that's just a general visual guideline that's not set in stone. But so I spent some time in here in the daily and the 4-hour, and what I came up with as a possibility is a expanded flat. Expanded flat meets all the measurements for retracement and for the third wave extension. It misses the upper one by just a little bit, but these things are approximations anyway. They're not exact. It's not like it has to come to the 1, 2, 3, 6 line, or it can't be considered. These are approximations. Just like this one could go out a little bit, which we'll talk about in a moment as a potential for some downside action, maybe even into the lower 90s or upper 80s. So to justify this, I think I need more than just like, okay, it meets this measurement. But if we've got a flat, then it's going to be a 3, 3, 5 configuration. And so do we have that? The first 3 I've got here as another surprisingly expanded flat. The second 3 I have here, and I was surprised at this too as well, an expanded flat. And I've measured all these using the same measuring tools that I use for these. And so these all measure out to be expanded flats. They meet the retracement value for wave B and the length value for wave C. The same thing on this one. So both of those being expanded flats I already thought was really kind of interesting. And then now I struggled with what's going on over here. What is this craziness? Expecting a 5-wave move, but it doesn't look impulsive. And then I started looking, I was like, you know what? I think that might be a diagonal. Now, to meet a diagonal, we need either a 3, 3, 3, 3, 3 on all of these, or you can do a 3-5. No, I got that backwards. You can do a 5-3-5-3-5. But what I've got right now, so I zoomed into the 4 hour. Let me pull this up a little bit. And I started measuring, and I'm getting zigzag, zigzag, zigzag. This one I don't know yet. And again, I measured every one of these orange lines, and they are all measuring out to be zigzags, meeting all the requirements. So I'll show you on this last one what I'm looking for. That's why I went ahead and put these points here. It's just this B and this C, which also includes this 4, are approximations right now. But using my retracement values, if I start from the origin of A to the end of A, and I select zigzag because zigzags are what I'm expecting, then this other orange area, let's see if I can turn off that one. I'm expecting a turnaround somewhere in this orange area, and then if I do, then I can project where wave C should be going based on the length of wave A projected from the end of B. I get a zigzag target zone, something like that. So that's why I've got my C and 4 right there as a possibility. Now that'll change if B traces lower. So based on the fact that the first 3 waves have already been zigzags, I think it's a pretty good chance that that wave 4 and wave 5 are also going to be zigzags. Let me clear these 2 out and then show you what else I'm looking at. So I'm going to clear out these zigzags just to make it a little less troublesome, and then turn that bottom trend line on. So we've already reached well into that trend line. The other thing you get with zigzags or with ending diagonals is these, you can have them diverging, but this one already is starting to look like a converging diagonal. I guess if you get a little bit bigger, it could be diverging, but I'm going to assume that it's going to be, a little bit converging like that, which that's not a big difference. But the other thing is the Elliott Wave Principle book talks about frequent throwovers in wave 5. And so we've already got a good trend line from 1 to 3. So this trend line, this yellow trend line here is good. It's a very solid trend line. The question is, will we get a throwover on wave 5, which is common? And if we do, that might take us down into, like I said, the lower 90s, the upper 80s. Even to come to this trend line, depending on how late it is, could bring us into the lower 90s. Now, let me show you something else. Liquidation heat map. It's a liquidation heat map for Bitcoin. As you can see down here, there's a lot of leverage down here, a lot of liquidity that could be wiped out by price going down. Price tends to attract to these brighter yellow areas. Now we could just go up here, but I mean, I've got an area all the way from about 92.5 all the way down to kind of the 87 area. And so on the chart here, I went ahead and put that liquidity zone in there, and you can see that that's already tracking well with the end of this. And if we go down that far, I just see the likelihood of us going further to sweep that liquidity, close out those longs, especially for market makers and manipulators, and that would support a throwover of this line. Now, it does significantly extend the base zone here for a expanded flat, but again, remember, like I said earlier, these are kind of approximations. They're not hard and fast rules. They're more like tendencies, probabilities. The probability is higher that it will reverse in this zone, but probabilities are like anything else. They can be broken. So I think there is some good possibility that what we end up seeing is a zigzag up to 4 and then a zigzag down to 5, and the question is how big or how steep will this zigzag be? How long will it last? And you can see here, I mean, if it looks like that could take us into the end of November or the beginning of December. However, the good news in all of this is if it does do that, then the other thing we would expect at the end of a corrective structure is for the previous trend to resume. And I do have, if you saw in the liquidity heat map, there is a zone up here, and then there's some more further up here in the 130s. I didn't mark out the 130s. I did put the one here in the 115, 116. I think it was 116.5, 117.5. But the other thing you expect is like, well, if you've had a 5-wave move followed by a corrective structure, the next thing you should have is a 5-wave move to the upside. Let's put that other liquidity zone. This other liquidity zone is just huge. So it's hard to say, you know, do we want to put 139 all the way down to 126? 126 to 139? Well, let's just put it on there. And $126, $139. Well, that's a liquidity zone right back up to, and guess what? That also matches if you're looking, if we're back at the 4 hour, but if we're talking about this ending diagonal here, then the ending diagonal, the target for a diagonal is its origin, which its origin is right back right back here, which is also where that liquidity zone is. So all that to say, it would not surprise me a bit for price to come all the way down into this liquidity zone in the lower 90s, upper 80s. Everybody is going to freak out. And then for price to turn around, maybe punch through here and then keep on going up until this zone, maybe take a break and then start going again. This could potentially be the 1, 2, 3 for another move higher. How high? I don't know. But again, kind of going with the similar sizes as these previous moves. Well, no, I guess 2 wouldn't be that high. Be more like a 1, 2. Then 3 does something, and then 4, and then 5. Maybe something like that. I'm not making prediction futures on where price is going to go with Bitcoin, because it could also all go down. So anyway, that's what I've got in my Elliott wave analysis of Bitcoin at the moment. I'd love to hear your feedback and tell me what you think.